We were approached by our former minister, Ministry of Financial Services, to do international certification and taxation since BAT was coming on board. So we went ahead and designed the syllabus, syllabi with the Ministry of Finance. We got it internationally accredited with our partners in Scotland, Chartered Institute of Scotland. Now we have four courses that are internationally certified by them. Two of them go to the masters, who gives you credits towards the masters. We're trying to get this one as well. So hopefully, for those who want to pursue a master's, they'll give you credits. Hopefully, as I said, get credits towards them. If you've noticed in your book, in the schedule, have any? Does everyone have a schedule? Should be to the front. Alright. We have 4 units, okay? Mr. Pindle will be covering fundamentals of taxation. What you're missing is module 4, taxation. What you're missing is module 4, which will come shortly, as Mr. Pedro Delaney is developing that for us. The million-dollar question, the exam. The exam is a 2-hour exam, 70 questions, multiple choice. It is open book, but please don't let that fool you. Alright? Questions, the questions on the exam are not like fill in the blank. It isn't like you have to look in the book and find it. You need to know your material. You'll also need to know your VAT legislation, which I will print out for all of you, and the regulations. You have a mock exam, I can send you a link to. The exam is computer-based. So you get your results right away. Please make note, the exam is May 30th. Okay? I believe that's a Friday. Please schedule, take the day off. Need it. Anyway, our former minister, before he was running the country, he was a tax man. Trust me, he knows everything there is to know about tax. Okay? So, with all that said and done, if you have any questions, any material missing, please see me. So forth, so forth. We're going to try to keep the schedule every Saturday, 12 to about 2 to 30. Okay, with that done, I'll let Mr. Pindle go ahead and take over. Where's my computer? There you go.
Good afternoon. My name is Ryan Pender. No longer the Minister of Financial Services. It's everybody. I'm not good with names. We'll go around one time and get everybody's name. Even though I won't remember. And if you could tell us where you work so I can get a sense of the industries that you're in or where you want to work.
Okay, I'm currently at Advent as an intern for others. Trina Thompson, I'm not at one. Paula Money, BTC, accountant.
Other pro BSI overseas.
Smith, Lombardier.
Good. Welcome. So we have accountants, auditors, and some offshore bankers. That's good. That's good. I'm responsible for, as Miguel said, we put this course together when I was the minister. I taught it last year as well. Three classes I taught last year. Teaching 2 this year plus a review session. I'm going to be responsible for Module 1. Module 1 covers general principles of taxation, mechanics of tax systems and development of tax policy, operation of tax administration, tax review collection. Those are the 3 areas we cover today. Interpretation, application of tax legislation, comparative analysis of international and regional tax systems, and Caribbean and Latin American tax policy and tax reform issues. That's the second class. That class will be not next week, but 2 weeks. They're going to readjust the schedule. I think they're going to move one of the Module 2 courses up. I have a funeral I have to go to next week, so I won't be able to teach. But today we start on fundamentals of taxation. And essentially what we want to cover in this section is a broad overview of what tax policy is, what it's used for, what the purpose is, and how it's good and bad. Now, I always say there's really 2 fundamental reasons for tax policy. What's the first one? It's pretty obvious, right? Raise revenue for the country. The second one is not so obvious. Bless you. The second one's not so obvious, and I say the second one's probably more important than the first one. No. To develop and support an economic model of tax. So you could use taxation as an economic incentive, actually. And many times it is done that way, and we'll show you. Data has everything. Yeah, how's this change? Yeah. Again. Yeah. Anyway. Put this in. Okay, we'll start here. General principles of taxation. And feel free to ask me any questions as you go through. If there's something that you don't understand, I'll try to use examples to explain some of the policy initiatives and the like. Has anybody heard of Adam Smith? Yes. Adam Smith created these 4 fundamental areas of tax policy. And this was his quote, right? The subjects of every state ought to contribute towards the support of the government as nearly as possible in proportion to their respective abilities. That is, in proportion to the revenue which they respectively enjoy under the protection of the state. The expense of the government to the individuals of a great nation is like the expense of management to the joint tenants of a great estate, who are all obliged to contribute to the proportion to their respective interests in the estate. And the observation or neglect of this maximum was quality or inequality of taxation. Essentially, everybody has a responsibility to contribute in proportion to the support of the state. Now, this is where we talk now about the economic impact of it. Tax systems design is also closely linked to domestic and international investment decisions. So tax policy can determine how investment decisions are made in the economy, including in terms of transparency and fairness. Strengthening domestic resource mobilization is not just a question of raising revenue, which is what we said. It is also about designing a tax system that promotes inclusiveness, good governance, matches the society's view on appropriate income and wealth inequalities, and promotes social justice. The first one, tax systems are closely linked to domestic and international investment decisions. Do we have any examples of those in the Bahamas? What about hotels? Do hotels get tax concessions by law? The Hotel Encouragements Act, right? The Hotel Encouragement Act is a piece of legislation in the Bahamas that waives all import duties and real property taxes for hotels. There's tax policy, even in the Bahamas, to develop and encourage domestic and international investment decisions. Right? We have it with manufacturers, Industries Encouragement Act. We have it with family islands when we want to have the family islands, so the Family Islands Development Act. We have it with downtown because we want people to continue to invest in downtown. You have the Downtown Development Act. All of these are tax policy designed to influence investment and economic decisions in the country. That's the second fundamental element of taxation. One is the revenue, which is an easy thing to see. Two, how do you influence? So, Smith said there are four what we call maxims of taxation. Adam Smith's four maxims: proportionality, transparency, convenience, and efficiency. If you get a chance to read this, you should read it in your materials. It's an excellent, it's probably the best piece of materials that I put together. This House of Commons Treasury Committee gives you a great overview of tax policy. And it says it covers a whole range of matters. Where should the tax fall? Who should be taxed? How should it be taxed, right? Should aim to achieve through legislation those matters. So when you look at tax policy, let's look at tax policy in the Bahamas. How do you get taxed? You get taxed on import duties, right? At the border. You get taxed on real property. You get taxed on both real property tax and stamp tax. Now you get that tax on consumption, that. What you don't get taxed on in the Bahamas is income. Never happened. You think so? No.
Would you argue that national insurance can be a factor?
National insurance is a fee. It's not based on income because it's capped. So it's not really viewed as an income tax because it's not in proportion to your income. Right? Because it's cut off at a certain level. It doesn't graduate up all the way. So no, we don't argue that national insurance is a tax. Or some may.
Don't all countries that have that have also?
Yes. I think we're the only ones that
I know. I understand we are the only one now. I think I'm saying that one I agree with.
Will we have an income tax?
I understand we're the only country that has that doesn't have.
Let's talk about that for a little bit. I think that's a good thing to on the fairness issue of tax policy. You'll see we go through and talk about fairness. Let's use this as an example of fairness. Talk about fairness, right? Income tax. We have offshore bankers in here, right? What would happen if we taxed the clients on income, especially the ones, the non-residents that live there? Right. What would they do? Go somewhere else, right? Okay. So we can't tax that. That's the second largest industry, indirectly 36% of the economy, responsible for the middle class, yada, yada, yada. We can't tax them. Okay. So you have the foreigner. No income tax. But you have the Bahamian, right? And you won't put income tax on him. Which politician is getting reelected? Right? No one. Is that fair? Is that fundamentally fair?
They don't pay back, you know.
Yeah, they do. If they live here, they pay back. Absolutely.
They only pay.
But if they live here, they pay back. Because remember, that is a consumption base, a domestic consumption base. So you have to consume domestically. That's why you ask, but you're actually an exporter. As an offshore bank, you're an exporter. You're delivering services internationally to a client that doesn't live in the Bahamas. Think of it the same way as goods. If I'm exporting a good, even though I may have made it in the Bahamas, I am selling it abroad to a client out of the Bahamas. Same thing in banking. Right? So you're actually zero rated or offshore banking because it's an export. It's an export service. Right? So income tax. Can you put a fair income tax in for the Bahamas? Has economic implications. Remember, revenue and economic decision. So we withhold the income tax in the Bahamas. Why? For an economic decision that will violate the principle of fairness. That's why we don't have an income tax. This is the fundamental basis of the economic development policy of tax. A tax structure which is theoretically structured to promote growth. Right? That's what you want to do with tax policy as for an economic development tool. Promote growth. Right? But it will not succeed, this is important, if businesses are faced with constant change or inefficiency of collection. And those inefficiencies and change outweigh the benefits. So if I'm changing and now you're not even giving notice, this happens now in the Bahamas, right? Every budget year, what happens? Duties change, right? What do you hear? You hear the outcry from industry, right? Duty on cars went up. Didn't tell the industry. What happened? Outcry, right? Duties, different duty rates, and if you don't give proper consultation, and it's always a constant change, and it's unexpected, it does more harm on the economic development policy of tax than good. Predictability is important in tax policy. Taxes can reduce growth, the opposite of what we're trying to achieve, even if they're kept stable and don't change. Right? Even if they're clearly targeted, and even if they're efficiently collected. This is in situations where incentives are created that will distort economic activities. So, let's use agriculture for instance. If I put a duty on agriculture products at 60%, I hold it stable. That can reduce growth. Even if it's predictable, transparent, stable, I don't move it, it can reduce growth. How can it reduce growth? Raise the cost of living. Our agricultural production does not meet the demands of our local population. So the cost of food and the cost of living goes up, distorts growth. Even though I know at all times it's going to be 60%. I'm never going to change it. Right? In fact, agriculture is 0 to 10% today, which is rather surprising. But you can't move it. You can't move it. Remember when eggs went up? You know why eggs went up? You can blame me. You can blame me. I raised the duty and I raised the price control line. Why? Because we had a producer in Freeport who couldn't compete. So we made the foreign egg less competitive. Put it on the equal playing field. Some question, did that stagnate growth? Because really, who did that hurt? That really hurt those who really couldn't absorb it as much. So you have a balance of economic development. Does it help to have a thriving egg producer in Freeport that's going to employ a bunch of people and have domestic economy while raising the cost of living for some others? The balance is, does it reduce growth or does it increase growth? Certain areas will reduce growth and certain areas will increase growth. There's that balance you have to have. Some questions on that. What do you think are important elements and general principles, overriding principles of tax policy? Is it only revenue? Or is economic development and growth a fundamental area? We see it even in the Bahamas that claims to not have a sophisticated tax regime. Right? But as a taxpayer, what's important to you? As the one who pays the tax. Is it predictability? You know what you're going to pay? Is there constant fluctuation, cost of living, and the balance between economic development and growth and consumer cost of living? As a taxpayer, cost of living concern might be more important. Right? You don't know them people in food work. But you know when you go to the food store, it's now $2.50. It used to be $1.90. If you are a regulator, if you're the government, if you're the VAT collection agency, what's the most important part about tax policy? If you're a business owner, what's the most important? Stability and predictability. That's right. This lists 3 important policies, features of tax policy. This comes from the OECD report that's in your materials. Likewise, another pretty good report. So long as taxation affects incentives, it may alter economic behavior of consumers, producers, or workers in ways that reduce efficiency. Let's speak about the hotel. Right? We give wide-ranging concessions to hotels. Hi, how are you? Looking for tax?
No.
Okay.
Company law. Thank you.
We should break off right away. So you have to draw a balance on this. This is the things that we're talking about with the eggs. Incentives. Economic behavior of consumers might be different from the workers. High price of egg to preserve the plant may be better for the workers, not well for the consumers. So you have to have that balance. So you got a choice on that, right? The man say he raising the price to go to the movies more than the VAT. Right? So now it's your choice. Your choice to go to the movies or stay home and watch Netflix.
They increase the prices more.
So you have a choice. You have a choice. You have a choice. You have a choice. Since you bring that up, let's talk about this choice. This is a good example that I used last year. Choice. So we know in VAT, if you're below $100,000, you don't have to register. If you choose not to register, that means you don't have to charge that. Right? So you go to ROI Key. Right? Drive into ROI Key. You hang a left. All of them registered because they all make more than $100,000. Right? All the physical structure, restaurants, and everything else. Right? You hang a right. And the small stands and the mobile places, like you're not registered, they're not doing $100,000. Right? Tom stamp is what? $10? Tom salad, $10. Tom stamp, $15. Let's use Tom salad. Right? You go to the right, it's still $10. You go to the left, it's $10.75. Right? 12. And they go up to 12. What's your choice?
Also depends. Comfy again.
But it's a business choice, right?
Yes.
It's a business choice. So the guy down the right says, I'm in a better position because I ain't charging back $10 here. The left is $10.75. It's always a business choice. It's always a business choice. The second major feature of tax policy. The distribution of the impact of the tax across the population raises issues of equity or fairness, which must be given substantial weight even if it entails costs in terms of economic efficiency. So this is an argument with that, right? And this is a real argument today with that. The distribution of the impact is disproportionate. Why? Because those who don't make as much buy more, a higher proportion of their salary to live for consumables than the rich man who may only spend a small amount. Right? So If I'm making $1,000 a month, and I'm paying $500 in groceries a month, and I'm paying half of my salary is in available consumption. If I'm making $10,000 a month, and even if I'm paying $1,000 in groceries, that's still only 10%. Right? So the proportionate impact of that today is an argument. Is it fair? Is it equitable? Right? And what does it mean to economic efficiency? Because now, the engines of the economy, who are the consumers, who in most cases are those who are making less, are disproportionately impacted. And what does that mean to the economy? It's an argument. The third principle, the enforceability of the rules and costs arising from compliance are important considerations. More so since these are both affected by implications of fairness or efficiency, public perception, and fairness of the tax system. That's an argument, right? You can't collect the real property tax. No, you collect that. That's a real argument. And you all never lock nobody up for NID. So how are you going to lock somebody up for that? Enforceability. It questions the integrity of the tax policy. It questions the integrity of any new tax reform. It's a fact. It does. And you hear the discussions out there. Right? The enforceability of the tax rules. And what does that mean for fairness and for the proper formulation of that tax policy? Tax? Right. So we dealt with these. How do these features affect tax policy in the Bahamas? We talked about the disproportionate fairness, right? We talked about the egg example. Am I going the right way? We did that one. We did these questions, right? We did these three. We just did these three questions. This is a repeated slide, right? There we go. Here we go. So that's kind of the overview, kind of from a tax policy point of view, how you have fairness, how you have to have it proportionate, the concerns when you have disproportionate treatment, and the economic impact, and how you do tax policy to develop and promote growth. Remember, develop and promote growth. What do we have in the Bahamas to do that? We have incentive legislation to get you duty free. That's the choice we take. The United States, they give you tax credits, they give you tax deductions for incentives. If you give to a charity, let's say they use tax policy to help social good, you get a tax deduction on your income tax in the United States. Bahamas, we utilize exclusions from duty. Fundamental principles of tax policy have basic principles and procedural principles. Again, it has to be fair, it has to support growth, and it has to support competition. Those are your basic fundamental principles. You cross those, you're in trouble. You think we're in trouble already? Yeah. It has to be procedurally effective. You have to be able to implement it and operate it. There has to be certainty as to what the tax system is. There has to be stability. It has to be practical. Hello. How are you?
Well,
I'm Ryan. What's your name?
my name is Catherine Rowe.
Where do you work?
I'm Samantha.
All my competitors here can see what they say. First basic principle of tax policy is fairness. Taxes should be fair. You shouldn't overtax. There should be a fair amount. Remember Adam Smith. You have an obligation to proportionally support the government. So it should be fair. If a tax is viewed as unfair, it's very likely that there will be a culture of avoidance. And you have the risk of losing legitimacy of the actual tax policy. So if you believe that a particular tax is unfair to you, you're not going to pay it. You're going to protest. You're going to rise up, right? Culture of avoidance. Do we have any arguments here in the Bahamas, since we're in the middle of tax reform, that says it's not fair, so I ain't going to pay? That must be pretty fair.
Well, I'm once again thinking about that, right? Now, even the persons who have not registered will eventually have to increase their prices because they also have to pay VAT on the goods they buy and sell. So, is it fair to them? Because they're under $100,000 threshold.
They should register.
But that's how much they are. That's what the option was.
You have an option to register.
Right. You have an option if you make less than a certain amount. But I'm saying they will eventually have to because they will suffer.
They're uncompetitive.
It is.
Do we understand that? With that, I don't think I'm teaching with that much.
Not yet.
I know when I did my review session, I covered every module they asked me. So that, right? You have your registered and your non-registered. Right? If you buy a good for $100, right? Pay back on that. You have $100 of expenses to operate tied to that good. Pay that on that. Now your cost is $215, right? And you sell it for $300. What's your profit? You could add that, right? What's that? 7.5, 15, 22.5, all right? So you have paid 15 and collected 22.5. What do you give to the government? 7, right? And you keep, so you deduct 7.5 of this transaction, you keep 315 and because 15 offsets what you pay. You're still making the $85. If you're not registered, same good costs $100. Gotta pay it back, right? You're not exempt from paying back. You're exempt from charging back. Right? Same $100 to operate for that good. Paying back, right? That's the input cost on that. It's $215. You sell it for $300, right? And don't charge that. You've absorbed all of these costs. You can't offset it on the back end. It's now more expensive for you to operate than the guy is charging back. Or to force you to register. I advise every small business, every charity, every single operation in the Bahamas to it. I sit on the board.
I would It's obviously in their best.
Nobody explained it to
They'll
me.
take them.
Nobody explained it to me. Right? So on the registration option, let's go back to fair. Taxes should be fair. By giving people an option who may not even understand why they're taking that option, is that really fair to do them? Because you put them in a non-competitive advantage. Question, is it fair? I would have had everybody register. Period. The same question of fairness came up with exemptions. Remember Rupert Roberts when he was kicking up? About y'all get charged, it cost me all this money, and I can't stay in business, and everybody laughed at him because that's Rupert Roberts. Right? So he was right. When we took the exemptions away, did you hear from Rupert Roberts anymore? Not a peep. I don't even think they bought the shirts in the food store anymore. Why? Because his position was having a lot of exemptions on breadbasket items was unfair to me. Why is it unfair to me? Remember the registration versus non-registration discussion? Okay, it's the same thing. If he said half of his sales would have been exempt items, which means I can't collect to offset my cost. Which means I have to raise the cost of the non-exempt items to offset it, which goes to your pocket, because he's going to raise them high. Right? Otherwise, it's not fair for me to operate. I'm not at an equal footing as another business person, because I sell a disproportionate amount of exempt goods. His argument was fundamentally about the fairness of the tax system by having so many exemptions that disproportionately affected his business, his type of business. Not Kelly's. Kelly's don't sell nothing that was going to be exempt. The food store. Right? And he said, I can't offset all the costs. It's going to be far too expensive. Nobody's going to buy those products. So I got to absorb the cost. Now that goes to my bottom line. Not fair. But Kelly's they don't have any exemptions. Doesn't affect. Fundamental policy of fairness. What was he doing? Created a culture of avoidance for him. I'm registered, I'm paying, right? I can go support the DNA, right? Risk losing legitimacy from one of the largest business operators in the world. So what's the proper thing to do? Okay, wipe out the exemptions and go low on the rate. Remember, it's 15% then with exemptions, 7.5% no exemptions. He's now happy. Okay. So we gave some examples here on that fairness issue. Right. Basic principle to support growth. Remember I told you this is one of my fundamental policies behind tax policy? I believe tax policy is the most effective tool for encouraging growth in your economy. All elements of a tax system can impact growth, positively or negatively. Governments who are imposing tax policy, like the Bahamas, should be mindful of the effects that tax will have on economic growth. Have to take that into consideration. So remember when we said VAT has a disproportionate impact. Many of the consumers in the economy are those that make less, have a higher proportion of tax. What's it going to do? Slow down the economy. People aren't going to be afford to spend anymore. What do? You put in an effective social safety net program to catch that. Just to help support and put a foundation so the economic growth isn't as hard in that type of tax policy. We recognize tax policy can influence behavior. Rupert Roberts. And economic growth. Hotel Encouragement Act, attracting hotels to the Bahamas. Right? Industries Encouragement Act, trying to develop manufacturing in the Bahamas. We also agree that is not the sole purpose, or maybe the primary purpose. I think it's the primary purpose. That's what they say. So there's a balance. There's a clear balance in tax policy. Tax policy can stimulate growth. We have it here, as we said, with the incentive legislation. But what are some examples of tax policy that can impede economic growth? That can slow it down, that can stop it?
We have tax it.
Judy? And what type of economic growth? Remember the balance, right? So water. Water carries a 75% duty. Why? We got Aquapure and Chelsea's and all of them, right? Domestic manufacturing, jobs, right? Bahamian entrepreneurs, right? Some technical skills in that, advancing that, right? Does that impede economic growth, or does it help it? One would think it helps it. You have to have a domestic economic component of your country. You can't always depend on tourism and financial services for everything. Depend on it for a lot, but not everything. So it's good for economic growth. Having no income tax, does that help or impede? No. It helps. Right? It helps. Taxing the numbers, boys. What's that going to do? What's that going to do to economic growth? Why? Why would it help economic growth? Not revenue. Remember, we have two things: economic growth and revenue. That's a revenue item. But if half of them go out of business, how does that help economic growth? So what does that do? That could impede economic growth, right? That's where you make a decision on the revenue side. Remember the prior slide that says economic growth? We agree that is not the sole purpose or may not be the primary purpose. When you tax the numbers, boys, economic growth wasn't your primary purpose. It was revenue. Revenue. And in that sector, it surely impeded economic growth. Economic growth. Not Sebastian growth. Economic growth. Right. So that's an example of how you make the choice on tax policy, even though you know there's elements of the economy that's going to be right? And of course, there's ancillary reasons, legitimizing and all that stuff. But from a tax policy point of view, support competition. An economically efficient tax system that is both competitive and stable helps minimize distortions and provides businesses with the confidence to invest and expand. Remember we asked in the beginning, if you were a business person, what did you want? You said stability and predictability, transparency. People operate their businesses based upon forecasts, based upon predictions, based upon market information. You're all over the place. Remember we used the car example? Every year it seems that the cars are taxed in a different way. They say, man, we just forecast for the year. We're on a calendar year and you changed me mid-year. You didn't even tell me about it. My budgets are off. My pricing is off. I got things on the dock now that are going to be affected, right? You hear that all the time from the car dealers. Why? Because the duty on cars is the easiest thing to manipulate for revenue. It's the highest revenue item in the scale. So you're always messing with that. Do we change it to engine size or do we change it to value? What type of cars are they bringing in? Where do you get the money? You're doing all this. Remember that whole fiasco? When they changed it from value to engine size, and we changed it back to value, right? It was vexed both times. Why? Because it gave distortions in their business.
And as a fit, no, it's not it.
No, it's not. Businesses depend on predictability and stability, right? And if they're on a calendar year and you change it mid-year and don't tell them you're changing it, it throws them all off. A tax system which is not competitive by international standards will not support growth. So here's the argument now coming on income tax and high rates of duty. Right? So you have the world out there, you have all the trading guys saying you got to lower your duties so I can get market access, put an income tax in, everything will be more competitive, businesses will be more competitive, be good for the consumer. Your tax policy with high duty rates is not competitive by international standards. Right? That's that argument on tax policy. What do we choose to do? We put a VAT and we say tough. It's still going to be not competitive by your standards. But that's an example of how international standards might view the tax policy of Bahamas as not competitive. It's not a simple matter of tax rates, but the stability of the system as a whole. Remember, and collect no real property tax. That impacts the stability of the system as a whole. If I can't collect one type of tax and I put all the pressure on another type of tax, it doesn't make any sense. and it makes it uncompetitive. If I got casinos in the Bahamas that have to pay their casino tax every year, and then I look and I say, man, this fella ain't paid for 10 years. Are they still throwing the dice? Uncompetitive. Look at those types of things. We spoke about this. I keep answering your questions for you. But international standards of competition, our high duty rates are viewed as not competitive. Into the procedural principles now. Certainty. This goes to the law. The law needs to be clear. I heard Miguel say that he's going to give you the VAT legislation. Good luck. Right? Okay. Tax law, by definition, is complex. By definition, it is very complex. I practiced tax law for 10 years as a lawyer. It's a complex thing. Miguel making it much more harder when he says you got to read that VAT legislation, because that's not clear. Does not necessarily provide certainty. Heaven forbid you got to read the regulations too. Law should be written as simple as possible, because the challenge is tax by its nature is complex. The hardest thing I did was, as a young tax lawyer, to speak to clients. Because I was a technical guy, I came out of law school and all this stuff, and I could read it and I could analyze it all technical. I could explain it to my client, who may be a sophisticated businessman, but they don't have to. By nature, it's complex, and it is a skill. I don't know how many of you have been to the VAT education classes and sessions that they had. And if you watch different types of people present in the education, you either walked out more confused or a little bit clearer. Right? Because tax is a difficult thing to explain. It's complex by nature, so you have to try to make it as simple as you can. If you read the Tariff Act, it's thick, but you know why it's thick? They just have schedules and schedules and schedules. It's actually simple. You go in the back and you look up your product, you go along, it's this rate. It's a simple way to present it. Law with a bunch of words like that? Difficult. The confidence that the law will be interpreted and applied in a consistent manner. Right? We had problems with this. Meaning when I was in cabinet. Right? But we as a country with the VAT legislation and the interpretive guidance, you would hear it all the time. Especially you in the financial services industry. Their financial services guidance note at the beginning was not correct. Right? There was no confidence that the law was going to be interpreted properly. They had to fix it. Right? The guidance on commercial property sales with VAT was incorrect. They said VAT will be charged on the sale of commercial property. That was wrong. The sale of property does not attract VAT. Let's fix it. Those in those industries were losing confidence that the law would be interpreted properly. So legislation was so complex. You had to do regulations. Then you had to do rules. Then you had to do guidance notes. Then you had to make it simpler and do one-pagers. Right? It was complex. But that is a complex tax system. The key to certainty is the lack of complexity in tax. Do we have a complex or a simple tax system, or do we have both? Different elements. Remember we said tariff schedules? Simple to read. You know what you get in charge. VAT legislation, much more complex. Real property tax? The issue is in the complexity. Possibility. That's right. Next procedural principle is the procedural principle of stability. Make sure I don't go over too much. Stability. Stability in a tax system is understanding how and what direction tax policy is anticipated to evolve and change over time. Confidence that the law will be interpreted and applied in a consistent manner. The stability of the system is important. This goes back to the car dealer example. They would view the constant changes as an unstable environment. Sudden changes should be avoided. That's what we're talking about. They're on a calendar year forecast. July 1, announced, changing the whole way that your business is taxed. The whole way. All they do is sell cars. We jack you right up. Right? Oh, and we're going to put VAT on it, but it's price control. Jack them all up. Right? So it's important that sudden changes are avoided. What should you do 2 months before you're changing? Call them in. You think we're going to make some changes? What do you think? Is that going to hurt you? Can you draw a balance? Then you have more stability. They have confidence that the law is going to be interpreted and applied in a consistent manner, at least as consulted with. Tax has a very, very impactful element on your business. Very closely related is predictability. This goes more into the administration point. Cost and compliance must be predictable. Remember when we changed all of the fees, the customs, everything else? Making it too expensive. Remember Freeport kicking up at the container port and go back and change that? Because you're going to have to charge them more per container for the customs officials. It's important that the implementation of the administration be regarded and contemplated in tax policies formulated. That's why when we were going with the VAT policy changes, we were going with administrative changes as well, right? So you had your Central Revenue Agency now that's going to come into effect, right? Now the Central Revenue Agency will be essentially the tax collector. Real property, customs will report, VAT, right? Stamp, right? Business license. Now, instead of having to go all the way up here to get your business license and going all the way out here to get your NIB license, then you got to show that you paid up on your real property tax before you can even do business. Now, from an administrative point of view, it's centralized. So when you put in a very complex system, you try to forecast the implementation and administration changes that are going to be needed and do it in conjunction with that. It gives an element of predictability. Which principles do you feel are most important to an effective tax system? Is it predictability? Is it the car dealers? Predictability and stability? Is it Rupert Roberts with the fairness? What's the most important element? Fairness. Yes, I think that's right. Why do you say fairness?
Because every citizen will be able to take it out. That should not be done. That's why you create more profit than you actually have now. Yeah. And then the persons who are in the middle class may, for those who can't think for themselves, while the rich get richer.
And which areas do you think are lacking in our current system? Don't say all. Not on the tax. So if you have $100 that you're bringing in, it carries 45% fee, right? And then 7.5% back. Both of them is the amount.
When they said the breakdown, it shows that we pay 7.5% on the actual.
145. They changed it. I know they did that first. Also, what they're doing, what some restaurants are doing, for instance, that $100 Let's do that, $15 gratuity.
And
And then you put the 7.5 on the gratuity,
Yeah.
right? Other than Chinese restaurants down the road did that. That's wrong as well.
Yeah.
That's wrong as well.
So the question is then, who gets it? The restaurants, how do they replace it? Because they always historically charge 15%.
The 7.5% is also not on 150. You gotta find them.
And the central revenue is more again.
But
Yeah.
if the 15% gratuity was actually a mandatory fee, then it would be correct for them to charge.
15% isn't mandatory.
So you're paying $100
So your 7.5% is on. No, he's right. Keep going.
you're paying
Almost everywhere in the
because you have both the product and the service. The 15
almost everywhere else you do pay that on gratuity, not the bonds. Because it's a service. It's a domestic service. You're paying for domestic service. Should be that. I know. From a fundamental tax, you're right. From a tax policy point of view, that's the right thing. So what do? You distort it, right? Because the restaurant lobby didn't want it, and neither did the hotels. Imagine that. Right? The hotels didn't want it. Why? Because it raised their cost of business. Because they build gratuity in. Right? Right? But am I right?
Yeah, you are. Yeah, even when it comes down to the babysitters, they're charging back on that. But now it came down to the point where they're taking the 7.5 of the babysitter's fee, money, or were they taking it out of the hotel? Like, we've been dealing with that for the past 2 weeks in the area I've been dealing with, and it's causing a headache. So it's very difficult.
So the fundamental elements of a good tax system, what are they? Statutory, it has to be in law. Has to be certain, has to be simple. Has to be easy to collect and easy to calculate. Don't start shaking your head. Has to be properly targeted. That's the fairness, the proportionate argument. Right? Has to be constant. That's the predictability argument. Subject to consultation. Remember I said you go talk to the car dealers before you change it. Regularly review it. Things change. Industries change. People change. Costs change. Regularly review it. It's got to be fair. It's got to be reasonable. It's got to be competitive. Those are clear fundamental elements of a good tax system. Now we're moving into operations, right? This is where you're shaking your head before you can shake it some more. The operation of tax administration is very important to the effectiveness of tax policy. That's the real property tax example, right? And the efficiency and effectiveness of tax collection. It costs you more to collect than what you collect, and that's the problem. Right? So the operation of the administration is key. It has to provide the backbone for what the tax policy is. If I can't collect that, the whole policy behind doing that is compromised. Right? If it costs me more to collect that than what I'm collecting, that's a problem. Right? Real property tax. When I was in government, contracted a private collection agency to go collect arrears. Right? So you had to structure his in a percentage-based way. You couldn't do it on a fee-based way, right? It was so hard to collect here. If I told you I was going to pay you $5,000 a week to go collect property taxes, and you only collected $4,000 from me, right? That don't do me no good. If I give you 15% of everything you collect, It makes it more efficient and effective on the collection side.
Why do you think real property taxes are so high to collect? I mean, it's study identifiable, we know who owns the property.
You don't want to sue your cousin. Government don't want to take nobody's property from them. That's their recourse. What's their recourse? My recourse, I get to take the property. So when I go down in Elizabeth and I got to run somebody from their house because I want to take their house because they owe me a property tax, you think I can do that? And when is it paid? It's always paid on sale or death. Right? So it's always going to be paid at some point in time. It can be paid on sale. You got to pay it on sale. You don't get clean title. And same thing on death, because when you transfer the property according to the will or probate or whatever, it's got to be paid. So you can get paid. So I don't have to kick them out of their house. And they're still going to vote for me.
Just make because I was thinking just create an incentive to have, you know.
When you ask a question, that's the answer. That's the answer to the question. So what's the other answer? I got to put it in somebody else's hands. They can make money from it. That ain't government. That's philanthropy. Virtually every adult citizen interacts with his or her nation's tax administration. The perception that a tax administration is effective, efficient, and fair is a fundamental component to the confidence of the tax system. Do you believe that our system is effective, efficient, and fair now? Well, I can tell you it ain't efficient. Because I want to open a business, I got to go to NIB here to get my number. I got to go up the road here to get my number. I got to go back to business license. Then they're going to send me to Works. Then they're going to send me all over the place just to get a business license to open and build a business. Right? So what do? You put it under Central Revenue Agency, one-stop shop. Create efficiency. Hopefully you make it more effective. And then the perception is, man, this ain't so bad. It took me a whole day to get my business license. Now it takes me 1 hour. You know that. Right? What are the core competencies for the administration? The actual administration of the tax policy. To inform and educate the taxpayers of the obligations. Right, so the education classes on that. This is how you fill out your form. This is how you submit it. This is what you submit, how much you submit, etc., etc., etc. Right? Process submissions and ensure they are accurate. Right? So the banks, right? You're all zero rated, which means you don't have to pay that on nothing. Inputs, collections, nothing. Offshore bank.
Services from a service provider.
Okay, let me correct that. Offshore trusts. You got bank, right? Trust. Bank, you're right. Bank has to pay on certain. Other service providers that aren't banks in the financial services store. What do I tell them? I tell them put all your costs in the trust, right? All your bank costs in the trust. Why? Now the question on this is you're still paying on a daily basis on inputs. You have to file to get your refund. Right? If you can't process the refund applications, effectively turn them around and pay them out. Right? One of your core competencies of administration is flawed. And then if that's flawed, lose confidence in the whole system. Right?
I think that's what I'm saying. You're saying that any services the bank pays for
on the non-custody service. Custody is taxed a different way, but they're all services. So I'll give you an example. Where do I work? I work in Deltec Group. Deltec Group could have fund admin, trust, bank, captive, whatever, right? zero rating. Zero rating. Some zero rating. Zero rating. All these things have nothing, you don't pay anything on the inputs. EC get back. What about the paper you get back? Computers you get back. Lawyers you get back. Locksmith company you get back. Zero rating. It's an export service. Pay for it and get it all.
That's a different thing.
It's an okay, well,
That's not fair.
now they got a good minister, man. They got a good minister.
They gotta do it?
No, it's not fair. I'm an exporter, right? I export click. 50% of my goods are sold in the Bahamas. 50% are exported. Why should I pay input VAT on the export function if something's being sold out of here? Remember, that's a domestic consumption tax. We're just talking about goods now. It's no different though. Services and goods, it's no different. So for this 50%, I get 50% credit on my inputs because I'm doing 50% export. Same principle. Same principle. I was also the minister for manufacturing. The core competencies, that's clear. Provide assistance to taxpayers. Gotta answer that phone. Gotta respond to emails. If they file an incorrect filing, gotta get back to them. Gotta tell them it's wrong. Fix this number. Fix that number. Have to engage. The challenges. This one that you can do. Weak tax administrations. Real property tax. You look at the tax roll on real property tax, they say 500 million. In fact, about 200 million of that doesn't even belong on the roll. Dead people ain't fixed the roll. So it's not even that, but it's a weak administration of that roll. Low taxpayer morale. Ain't nobody want to pay. I vex, man. I don't want to pay. Corruption. They see them fellas ain't paying, and I pay. Poor governance. These are all key areas that are entrenched in a poor tax administration service. Hard to tax sectors. The informal sector. So how am I gonna tax the meal lady driving around her car? How am I gonna tax that? How am I gonna go on Arm Bailey? Make sure they all pay their taxes. Hard to tax sectors, the informal sectors. That's why you had the $100,000 threshold for registration. This is hard to tax them. It's hard to enforce it. It's hard to make it happen. So you give them the option to get out.
I agree, give them the option, but it didn't appear, I didn't even hear them actually, maybe I might have missed it. You feel they actually encourage people to do that, so they were under the pressure. How can you do that?
They said a little bit.
I mean, if you go in and
But
say,
only way is, I don't have to read.
Yeah, that's all they
I feel it.
Some of them asked because once they were broken down in the meetings. Some of them went quiet about it because once they broke it down in meetings, some let them, okay, well you're paying this and this and this, and then you still can help it. They're like, oh, you can help with the light bill or help with some stuff. Then that's when they started to say, okay, maybe I should register. But it depends on, like he said, who taught it. Some of the meetings, for them to really understand exactly what was going on.
and they eventually learn it.
No,
because
They learned the hard way.
business persons, I find what I've learned is that if you want to do, you want to get a government contract, you have to have a VAT number.
Yeah.
So if you want a government to do business, you have to have a VAT that makes that person then registered whether you're under 100,000 threshold or not. So that's what
real estate, you may do appraisal or whatever, but at the end of the day, if you're gonna get services from the client, the bank, the quality, you have 10%
do any business with them unless they started to register.
Because of the big businesses and stuff, it's just it's a complexity of I gotta have these 10 service providers. You enforce them all in the same place.
But like you said, they too a lot of businesses didn't realize they made that much money until this came into effect. And I knew a lot of persons didn't want to register. Exactly, they didn't want to register at all, and then they're like, "Well, you do make this much," especially from us alone. And once you pull up the documents, it's like, "Okay, now we have to register." So
They knew.
They're scheming on
Yeah,
they're scheming on the business
they
license.
pretended they didn't know.
But you know where we came up with that $4,000 number of we anticipate to register? Well, the business license rolls, and whoever's over $100,000 on turnover, you lump them into the registration bucket. It's 4,000. You get like 5,500 people registered.
Yeah.
You know?
No.
Still in there.
That's how that meant with the circumstances. People say you have to register it.
People ain't affording business license. That's why they paying that now.
But then, too, a lot of businesses decided, well, they're going to change names or stuff because, like you said, you will now have to be up to date with your NIV. And a lot of businesses were way behind. So what they do is they close down their business and they open a new one.
We're probably guys too.
That's another administrative problem.
Exactly.
Say you cannot close until you.
Right, because you don't have that bridge where they can call and I mean, like, okay, well, this is person up to date before we issue the license or
Yeah.
so.
You'd be surprised how many people we got on the NIV and property tax for our rules now, the payment plans. Just to get registered for that. Business license. You had to pay your business license. Business license wasn't current, they weren't going to register you. You had to go in,
Where's the business?
get on a payment plan.
Exactly.
Depends on your turnover and the industry. So lawyers, for example, lawyers pay 0.75% of turnover. Right? 0.75. Different people pay different amounts. Some people don't pay none. So you had a problem, right? Yeah, not the banks, right? The banks don't pay the business license. The offshore banks. They pay a fee, license fee. The act says that you pay a fee, which is going up to $75,000, right? And it says you are exempt from payment. From payment of business license, right? That's what the act says. It doesn't say you're exempt from having a business license. You don't know how many offshore banks called me in December saying they couldn't register because they didn't have a business license. Didn't have one. At all. I said, so how do you not have a business license? Well, I don't pay business license. No, you don't pay business license, but it doesn't say you don't have a business license.
So they got away with one thing. That's it.
No, they have to pay. That's a license fee to get your license.
It's an error in the act.
No, it's not an error in the act. It's an error in administration because you should force them to show a business license when they pay the license, when they pay the license fee. Right? But nobody interpreted it as having to have one. But the law just says you're exempt from payment. We fix it. We solve it. Come in, we ain't gonna cause no problem. Yeah. Weak administration, right? Caused a problem in the implementation of that. So weak tax administration. The design of a tax policy should be influenced by the ability to administer. You hear that now, man, y'all can't collect the real project. How are you going to collect that? You don't have the ability to do it. Staffed by poorly trained and low-paid officials. Low taxpayer morale, corruption, poor governance, right? Structures which do not encourage integrated approach to different taxes, right? We don't talk about having to go all over Nassau, right? Imbalanced service and enforcement functions.
Yeah.
I go over 1, 2, strikes on the shoulder. I don't have one strike on the shoulder, right? I don't know what to look for, right? Imbalance. Yeah, don't laugh. Don't know. See, I'm different. I'm different. I go to the one with as many strikes as they can find, because then they may recognize me. Imbalanced service and enforcement functions. These are all elements of weak tax administrations. And when you have the one with one strike letting you through, you're losing revenue. Imbalance. Then you have inherent corruption in the system. Corruption by the taxpayer. Corruption by the taxpayer. Corruption is not always on the administration. It is also on the taxpayer. So we see these, and we could all give evidence in the Bahamas of these, right? Poorly trained, low morale and corruption, non-integrated approach, and imbalance in enforcement. So one would conclude we got some work to do. So we don't have a weaker tax administration. But the ineffectiveness of revenue collection is demonstrated by the ineffectiveness of our tax administration. When you get low taxpayer morale and corruption, poor governance, those are entrenched in your system. Those aren't easy to fix. Those are a fundamental flaw that goes to the root of your administration. High levels of corruption are strongly correlated to low revenue. The airport. What did you just say? I got 6 bags and I only got $299 on my declaration. Right? And I go into the one with the white stripe because the porter comes to me and says, "Man, give me the $100 I can get you." Happens all the time.
Yes.
Happens to me.
Yes. That's true.
Happens all the time. Right? Corruption. Low revenue because you ain't declared, you ain't paying. Poor governance drives inefficiencies. You all tried to get business license? Very inefficient system. Very inefficient system. The centrality of tax administration and collection has a positive effect. So again, we go back to the CRA. Central revenue authority. Better governance, better oversight, better efficiencies, all will combat low morale, corruption, poor governance. Remember? And I get this in an hour now. It used to take me a day. My morale is lifted. There's somebody look over everybody one shot so they can teeth. Better centralized training deals with all of these issues. The hard to tax sectors creates inefficiencies and ineffectiveness. The informal sector, industries and businesses. Talked about that. Phone card salesman, the meal lady, any cash business. You know what kind of enforcement and oversight and regulation we have to put in just to know what we tax in these enterprises? Cash. Cash in, cash out. Cash in one pocket. No, I didn't collect $100,000. I only collected 20. The rest of it, the suitcase went out. Talking hard to tax sector. Cash based. Meal lady, how many meals you sold today? I only sold 5. Right now her truck empty. Everything gone. Small businesses and professionals. You hear the cry now. I'm a single lawyer. I got my own law firm. I only got a part-time secretary. How are you supposed to do this? How are you supposed to register? Know what I charge it? Know how much is international and know how much is domestic and apportion all my bills. I'm a small business. I can't do that. I don't know what to do. And the capacity to manage these sectors. What's the accounting system for all the single lawyers out there? Hang on now. No. They don't even know what their turnover is. You only get paid half your fee anyway. Clients don't pay. We'll pay that on that too. Hard to tax sectors. If you do, you don't make 100,000, don't have to pay.
Easier for services.
Easier for services. Don't have to make invoice. What other elements are difficult to tax? Think about that. What is he? So, Margaret?
I don't even think about the family items. Right? Tourists coming in the ship, just cash, be selling like culture on the beach.
They taking you fishing?
Yeah.
Brady here. How do you address these challenges? What do you do? Just write it off and say, forget about it?
No.
Wait. I'll tell you what you do. Many don't even know this option is available. This is under VAT, right? If you make 400,000 or less, right? You could just pay the government. You still got to charge your 7.5%, right? You still got to pay on inputs. Flat 4% to the government. You don't have to do any accounting. Just pay the 4%. Works out to be a slight disadvantage to the taxpayer. If you just run the numbers, but not a huge disadvantage. Small ones, under 400,000 turnover.
So obviously,
Yeah, because you're not netting your inputs, remember? You're not taking a credit on your inputs. You're just giving remitting a straight 4%. So no offsets, no remittances, no nothing.
and just for clarity, it's 4% of what I can show you as my total revenue.
You're subject to audit because you're registered. Subject to audit, just like anybody else. Just like anybody else. Right? That's one way you address it. That's one way you address it. So you know that lawyer now? Yeah, I charge 7.5%, but don't worry about nothing else. Just give me a 4% and go on your way. So ensuring that you have proper tax reform and an effective tax administration is not an easy thing to accomplish. You see how hard it is just to change the tax policy and have the people understand it. And you have people that have difficulty understanding it. How are you going to get people who understand it to enforce it? It's a difficult problem. In order to address many of the weaknesses in administration, you need tremendous political will. Remember, I told you I ain't taking my constituents' house. Those are, not this one. You run to win, you don't run to lose. Tremendous political will is required. Right? How do you make an effective real property tax system? You start taking a couple people's homes. And people pay. People pay. All of them.
Yeah.
I take one from each class. Do you believe they take them home? I better go figure out how I can pay my real property tax.
It's gonna affect each class.
When do Bahamians pay their BC though?
Light off.
You find the money to pay it with the light off, right?
But his example is just to take one out of every class, so that will put fear into other persons, then you go and do something.
But
As long as it ain't mine.
payment plan. Yeah, as long as I do it. No, but my light off, I go to BEC, I say, I turn my light on. They don't say pay me everything. They say, give me 60%, put the rest over payment plan. No, I put the light off again.
I just want to draw a comparison for you, David. Even though, what happens in the United States? Because
They take your house.
well,
Well, I'll tell you what happens in the United States. When you go and borrow to buy your house, right? The bank puts the real property tax in your payment, and the bank pays it, right? And if you can't get insurance,
But now the
That's
care
true.
of the banks to look at the house insurance.
They do whatever they find out.
and they do it mostly for commercial property, not residential.
There might not be a system.
No, they have system.
Integrated system.
They have systems where you can say,
So requires tremendous political will to have an effective tax administration. If I know that they ain't working in business license office and the competency's not there, you gotta go in and fix it. And that means that I may have to fire like all these constituent who you got on that job in the first place. It's true. Let's not joke around. It's true. It's true. It takes tremendous political will. These are the challenges of a small country. Unique in that. The challenges of a small country. Strong leadership is required at the administration level, and a sustained commitment to eliminate corruption is required. Financial secretary got to be one hard fella, boy. Right? You got to be strong in there. Strong in there.
still access to the politician. Who pointed out.
He's still got to be strong. Yep. And at times, some of all of this could have faced significant opposition. I want to bring him in. He ain't one of us, man. He ain't gonna work with me. This fella, this financial secretary, now if I need something out of there, I can't get it no more. It's reality. It's real. That's reality. What happens? Reality. We face significant opposition to have the strong political will and leadership that's required to ensure your tax administration is consistent with the tax policy reform plan. This is a good quote. Many say this is written for the Bahamas. It has been concluded that against a backdrop of relatively weak institutional capacity and a poor culture of tax compliance, right, most developing countries, which the Bahamas is, face a long struggle to improve revenue performance in an efficient, fair, and consensual way. These difficulties are compounded by the increasing globalization of their economies, WTO, through foreign investment, trade, and labor mobility, a process to which tax systems need to adjust if the benefits will be realized. Right? That's a quote about the Bahamas. That's a quote about the Bahamas. Weak institutional capacity, poor culture of tax compliance, a developing country, right, that is faced with the challenges of a globalized economy, right, through foreign investment, through trade, through labor mobility, and how many people then get work? And you need to adjust, your tax systems and your tax changes have to adjust to reflect that. These sound familiar. Sir. Effective tax administration. The trend today is e-filing. Everything e-filing. Creates efficiencies. Right? It has been found that while countries with close to 100% e-filing rates are substantially more efficient, countries with as high as 90% rates do not experience the same efficiency. So it's not necessarily a balanced approach. So how do you do that? You know, if you go to Chile, Chile has an almost 100% e-filing compliance. Why? If you go to Number House in Chile, they're going to have a little portal to file your taxes. Everywhere there's a terminal to file your taxes. Right? You're having lunch at Brahman, I got to file my quarterly tax. Just go on. They have almost 100% of their tax filing going on electronic. Imagine the efficiencies there. You all that are working at banks, you have to do your factor reporting electronically. Things are shifting and moving to the electronic thing. And e-filing is going to be that. Babies can get on Facebook all day long. They can WhatsApp you every hour of the day. They say too complicated to file your taxes online. That's where a lot of effectiveness and efficiencies are being built in tax administration that otherwise are inefficient. I think we could reach close to 100%. Right. What would be required? What would be required?
We've been trying to get people.
Simplicity, access, training, incentives. Now you filed online, I give you 3% back. I give you 3% back.
I mean, look at banking. Trying to get people to use the ATM machine. I mean,
That's because they charge all that money to use the machine.
but it was easy to use the machine. That's come and decided a long time. But people say,
They don't want to pay the money.
yeah, because the incentive was to go to the ATM machine. But I'm just showing you where the culture of people using computers in the Bahamas is
Who is standing line?
like.
Do we stand in line? Old people are standing in line. That's who stand in line. Me and you don't stand in line. Young people don't stand. So they ain't long for everybody. That's what old people do. Seriously? Just this is what age of old people. My granny never used them.
So she will be e-filing.
But if you only have to file, remember with that, businesses file. Right? So it's a smaller number of people. Right? You now have an electronic window in customs to try to get all your clearance done electronically. We move in that direction.
American.
What? Where's the people customs?
I'm sorry.
Customs. You go to the electronic window and submit your declarations electronically. We're trying to get there, but even with the electronic window option, you have a local client. There are 4 major drivers of tax administration performance. 4 drivers. You got to be proactive. You have to understand the sophistication of your taxpayers and be able to. So if you're making $400,000, you're only paying 4%. You don't have to file all of that stuff. Generally, they will be less sophisticated taxpayers. Understand the segmentations. Streamline the operation. That's where e-filing is going to be. Streamline it. Rigorous performance tracking. You always got to test yourself to know how successful you are being efficient in your administration. So what does this mean? Generally limits the information coming in that's only necessary. Right? Because if you get a bunch of unnecessary stuff, it's only going to clog it up. I'll give you an example. The bankers would appreciate this. So we signed with FATCA a non-reciprocal agreement. Why did we sign a non-reciprocal agreement? We don't have no income tax. So we don't need to collect no tax on the income. And then what am I going to do with all of that information? It's gonna clog things up, causing the system to crash. Somebody gotta look at it. You streamline only to what is necessary to get the job done. Sounds easy, right? Task completed the right way the first time. Not so easy when you're doing tax changes and it's very technical and you've got to try to build that capacity. Complete the task when necessary, maximize the value of each task. You don't have to repeat something in two different types of tasks. You've got to be just efficient in the operations of your administration. This is what we were talking about with the 400,000. You got to know who your taxpayers are. Right? You may have a customized approach for each segment. So you allow groups of companies to file one return. Right? You know you have a segment group. All of them super values all over the place. They should be able to file a single return, right? Consolidate. Understand your segmentation. Individuals versus businesses. And the operating models could be different. 4% versus complex style. Ease of operations, mostly IT related, mostly technical related. Have to make sure they brought in a group out of New Zealand to build the back internal IT structure. Why? Because they're rated as one of the most efficient administrators of their value-added tax in the world. So try to get the best and streamline it the best way. Eliminate waste, eliminate inflexible application. In order to refine and enforce strategies and efficiencies, you must track yourself. You must know when you're not doing well, know what to fix. We always have a problem with that here, right? In anything we do, I get paid that house so pretty, and I never let put another piece of paint on it for 20 years. Maintenance, you hear about it all the time. Government go on and buy these cars, but they don't change oil. Same thing here. Build a new administration to run your tax reporting. You can never not go back and slip along with it. You have to test yourself. Better yet, you have to bring somebody from away who's not tainted, who don't have a cousin in there to test you. Right? Independent evaluation. Because I've been so good. Examinations and enforcement. And we had the question, well, how do you know that they only give 4%? That's really all the money they make and they stand under the 400,000. You have to audit. You have to audit. You have to look at the trends of your filing returns. If something looks wrong, you got to go in and examine. You have to. Don't the regulators come into the banks and the fund administration companies and FCSPs all the time? Sure. Right. They come in, do their examinations. And your best bet, your compliance procedures and everything else got to be up to par. The consequences. The effectiveness of the examination can be impacted by the proactive deterrence of the administration. So if you have an effective examination, then what do you say? They come too often? I got to make sure I straighten this year when they pay. I got to make sure that my compliance procedures are right. I got to make sure my client intake errors are gone. Aim is to boost compliance and reduce the obligations and workloads of the examiners. So when the examiner comes into the bank and goes, oh, man, you got everything straight. I still get paid the same. Awareness programs should be focused on areas where there are high non-compliance risks. So the cash businesses, right? We talked about that being a high non-compliance risk. You can try to do the 4% for those types of guys. They don't have to do all of this intricate stuff. But awareness programs, you always got to be educated. You always got to be on those high-risk collection areas. You don't want to spend all your money sending examiners to all of these hard-to-tax areas. You want to encourage an environment of willfulness and compliance. Also responsible for collections. That's one of the main reasons for having a tax system. Improved collection performance can result in significant increase in revenue. That's true. Efficiency in collections focus on limiting the arrears. Real property taxes say everything is all in arrears. You have to limit them. Try to keep people current. Payment plans. Whatever you can do to try to keep people at least on the current process. Periodic payments, withholding. Right? So on that, if you have high turnover, you may be on a monthly reporting cycle. I forget what the threshold is. But there's monthly, quarterly, and biannually, I think. Periodic payment, that's a risk element. We want those that collected all the money to pay the quickest. Bigger businesses. Because ultimately, in a value-added tax system, the businesses are the tax collectors. So if I'm the government, I want them to collect and remit as fast as they can. So they go on a monthly reporting cycle. That's the end of the presentation. I think 2 o'clock, not too bad. Do we have any questions, any dialogue? Any issues? Anything about all 4 modules? Yes.
This is more personal. When you speak of real property tax, you made mention of your constituents and businesses. I want to know, what is first time buyers? Only 250,000. Why is it that then you mentioned that you're supposed to be paying real property tax?
I got church code too.
I
get Port of Providence
okay,
too.
I'm thinking.
All of Yamacross, my
I'm
constituency
thinking
too.
Elizabeth Estates, okay, when you say that.
You know what? You're right, because it's been states.
Right.
I have 13 polling divisions. 1.5 come from those states.
Okay.
When I say my constituency.
Yeah. No, I was just thinking in terms of the question of the
No.
250,000
Yeah.
threshold for the first time home buyers. But and I think that that's a flaw even in the government tax system because you buy a home today under 250,000. 10 years, the value of it can be more than 250,000, but then that person may not feel obligated to go to the government and say, my home value is now over 250,000. I should be paying you tax.
They want to sell it, or they want to switch their mortgage to a lower rate.
They
got
set the
their
value.
Like say first of the year.
Is that the first of it?
You got a brand new.
And, but also, it's the, remember we were talking about
Change in
examinations? It's also the responsibility of the real property tax department to
That's
go
what
out
I'm
and
saying.
reassess on a
That's
periodic
my
rate.
thing. Because if I refinance.
And so if I know that if I know the Elizabeth Estates community now is going from houses in the range of 115 to houses in the range of 270, right? I know I got to go in there and do a reassessment. I do an examination.
And the other thing that's for
I think it's very efficient and
I know,
all departments. Only unless you want to remortgage or something if your house is under 250 or you bought it, then even if you buy, you just, you may not want to, children may not decide to change the name. It's still there forever, right? The real property tax company or department doesn't know the property is over the threshold and you should.
But they have an obligation that they don't abide by. Any other questions? Okay, well that was the first module. Like I said, the second half of the module 1 I'll be teaching in 2 weeks. I think they're going to come with some the first half of module 2 next week. If you have any questions, my email is rpinder, R-P-I-N-D-E-R, @gmail.com. With any of this, feel free, even if it's not my module and you have a question, feel free to ask. Module 2, that is like my thing, right? Anyway, they're all my things. I did the curriculum.
So you're not here next week?
I'm not here next week. I'll be here the following week. So I think they're going to make an adjustment in what gets taught. So I'll still teach the second half of module 1, but they may move the first half up, I think, next week. I have a funeral that I have to attend. If there's any questions, feel free to email me. I'll do my best to answer them. I'll also be teaching on the review sessions at the end. And that'll be not just a review of module 1, that'll be the whole, so any questions. Last year in the review session, I spent a lot of time on the international tax section that seemed to pose some challenges on inbound and outbound tax, and when is a tax going to be held and all that kind of stuff. So that seemed to be one of the keys. That and that certainly were the two primary review matters of the questions on the last day. I appreciate it. Hope you enjoyed your first class. I said I'll see you in 2 weeks' time, but if you have any questions, feel free to shoot me. And I think much is served. That's good. Which I have to teach.
The young ladies are trying to get attention.
Oh, I'm sorry. There are questions.
Yeah. Do we read this?
I mean, if I would use it, yeah, I mean, I would definitely read the House of Commons one. You really need to read them all for an exam. But if you want a good overview of the subject matter on tax policy generally, this is probably the best. Right. So if there are some things that are unclear, definitely.
So your presentation.
It's based. My presentation is based upon these materials.
Okay.
Right. That's a really good yeah. Although I still,
You still,
I still help them fellows out. Yeah. It's not easy.
This at all, every time. Okay. I will leave there.
I'll give you that.
Okay.
jail.
Right now, look at
What's happening at BSI, man?
voluntary disclosure.
Yeah, I hear you all chasing all the Italians.
These days, already was in hope. Named all that before the water. Well, our situation is such a Switzerland blocked all the payments.
I don't know how they can block.
That's them. We have people driving this much stuff. I know that. That's technically illegal now. If they don't block them, Switzerland is supposed to be. Switzerland is. Actually, I never saw this coming. Well, I just conflict with that decision. Switzerland passed law saying Italian clients. They transfer them. We have 2, 3, 4, 2. Why does the country? Why does the country name the same beneficiary? So that means you know, client wants to open up an account and say, that's it. That's wrong. They protect their time. But I guess people foreshadow it. If something comes down to this time, they'll go back. But if you don't know, this is like destiny.
I know. No, I saw the phone y'all was sending out. Hey, the chief legal officer. It's all that.
And Friday, before the meetings, I'm going on for yeah.
People. Any angry people. Rich people.
No, there's no company in the
spend it.
Oh, yeah, well, I think somebody advised us just to build a house. Buy a house.
Maybe I'll go back.
Buy a house, hold it, and stuff. And then you can take that to the IRS with the proceeds of the sale of the home. Or they're gonna ask for a way to get it.
Buy a house and keep it. Did you settle a trust? You settle a trust?
Well, trust was. You research that.
Is Cayman whitelisted? For BSF?
We blacklisted. Trust. Made part of the way that it is. Obama, I don't know why.
CIBC.
Been wrong in the way now.
Would have been straight. Yeah, it's like the yeah, that was a little closer to Republicans. Really?
Right.
It's okay.
Create other products.
We're doing it. The problem is we don't know how to use them. That's the problem. Practitioners don't know how to use them. They don't know how to use them.
Exactly like this.
They should have a certificate class on financial services structure and trust.
Yeah, that's all. I choose what depends on the fourth we want. Once Switzerland ruling, we have three people. Sometimes it's more than this patient. You got to figure out the case.
Yeah, that was a little harsh. They have to do that.
Even
Lugano.
but everybody.
When my mom said,
All right, ladies and gentlemen, I'm gone. You all have a good weekend. Okay, you too.
And they didn't want to
Discussion.
All right.
Right, folks.